educating a lot of people on building their first decentralized application and building their first smart contract, that cryptocurrencies cannot be escaped with. Like this is something that is here to stay and we need to regulate this. Like on the face of it, I just scan a QR, enter the amount and then money is gone. But it could have been relaxed. Like currently it is at the highest tax bracket, which is 30%.
Hello everyone, welcome to the Crypto Show by Koinx Capture. Today we have Punit from Koinx. Welcome Punit.
Hey, hi, thank you. Thanks for inviting, and it's a pleasure being here.
Great. So Punit, from a taxation background and coming into Web3, tell us how about your journey you started. Tell us about how you started in Web3 specifically.
Sure. So I come in from a Web3 background and then entered into taxation. So started my journey back, I think 6 years ago in the Web3 space. And so as a profession, I'm an engineer. So started by writing applications and code in the Web3 space with smart contracts, and then working with protocols on designing the consensus mechanisms, and then educating a lot of people on building their first decentralized application and building their first smart contract. So that is something I've been doing from, I think, 2017 days till 2020. And there I've taught more than, I think, about 9,000 plus people into blockchain, cryptocurrencies, smart contracts, and multiple other stuff around. And then during the second wave of COVID in 2021, so Sandeep Nelwal, we all are aware about this initiative where Sandeep started Crypto Relief. The idea was, how can we bring in global funds to help India fight COVID? And like this was one of the largest crypto funds, crypto charity funds, where Vitalik Buterin, the founder of Ethereum, ended up contributing $1 billion in Shiba Inu token.
Correct.
So this was a very remarkable event back in 2021. So I was leading that fund. I was CEO of that fund, and then I was managing it ground up from day zero. And during my time at Crypto Relief, like we deployed about $70 million in less than 1 year. We vaccinated more than 15% of Indians, and a lot of amazing stuff that has happened there. So that is something that I was doing during Crypto Relief days. And then I started Koinx.
So I knew about like you were with working on the crypto risk fund, but I knew that you were heading. That's a good thing. So with the overall background of crypto plus taxation and Web3, so I just wanted to know like what are your overview about cryptocurrencies and the taxation part around cryptocurrencies over the globe specifically.
Sure. So I think a lot of governments, like initially there was an idea, or there was a thought about how should we regulate this? How should we, bring in regulations around cryptocurrencies? Will this be acting as a commodity? Will this be acting as a security? Will this be acting as a currency? And how do we position it, and how do we regulate it accordingly? But then what they've also realized is a lot of people are trading into cryptocurrencies. There is a wide adoption, and people want an alternate investment class apart from stock markets. And like they are also looking at the possibilities of blockchain, and how blockchain overall can bring in a lot of digital public good, and how it can contribute towards public good. So keeping all of this in framework and in mindset, like they realized, or people realize, that cryptocurrencies cannot be escaped with. Like this is something that is here to stay and we need to regulate this. And that is where government said that while we are, so this is more of a global in nature, and like crypto is not something that if one country is regulating it, it can stop, they can stop overall control of it, since like the entire nature of crypto is geographyless. So anyone can transact anything. I can just create a wallet, transfer bitcoins to any other address, and that person that I'm transferring to can be anywhere. Can be my next neighbor, or can be a person in like Bahamas Island, or can be at anywhere else. So with that in nature, like government also realized that it is more of a global thing, and countries need to come up with regulations together rather than individual countries working on silos. So that is the overall area around regulating cryptocurrencies. But then with taxation, what countries look at is, hey, like people in my country are trading on cryptos and are earning profits. How do we bring in a framework so that we don't lose out revenues on it, and governments can start, channelizing certain revenues out of it while the overall regulation is coming across. So this is something a lot of countries have started working on, and I believe as of today there are more than 40 countries that already tax cryptocurrencies across the globe.
Right, right. So, with this overview about like how the whole procedure works, you know about like you, of course, we everyone know about like there are multiple things involved in just not cryptocurrencies like staking, airdrops, then the DeFi thing. So, what do you think about this perspective about on a perspective of the taxation part and for both as an individual plus as a tax authority? What do you think? How this can be managed?
So there are multiple ways of looking at it, and like a lot of organizations, like there are different types of transactions that occur in the crypto space. There can be staking, there can be mining, there can be like people taking in liquidity and doing transactions on future contracts. Then there can be margins, and like airdrops and multiple such types of transactions. And each of this transaction has a different taxable event and a treatment. So like airdrops would be taxed differently, and staking rewards or staking interest that is coming in would be taxed differently. While in a nature, both of these transactions are deposit transactions into my wallet. But then even if it's a deposit transaction, the type of deposit will be different. For example, in India, if you are getting a deposit from your friend as a short-term loan or as a gift, it is taxed differently, but in your bank account, it is a received transaction only. And versus if the bank is giving you interest on your savings account, or interest on the balance that you have on your savings account, that is also a deposit transaction, but it is treated accordingly. So in crypto, like in different countries also recognize some of these different types of transactions, and then specifically give a label that this is to be treated accordingly and in this particular fashion. For example, in US, they already label mining, and you can label your deposits as mining income and then take tax treatment accordingly. But let's say in case of India, like there is not specific definitions around it. There is a blanket that any virtual digital asset transaction that is happening in, that can be your salary transaction, that can be your like in staking rewards transaction, that can be airdrops, is a flat 30%. So depends on country to country how they treat it, but it does not mean that these types of transactions are not taxed. They are taxed, and it depends the interpretation that the tax officer is taking in, and interpretation that the tax advisor of a client is taking in, and accordingly they categorize those transactions in respective hits.
Interesting. So, how to determine like if a particular cryptocurrency, for example, some people still do get income in cryptocurrencies. So, how to determine it is as a capital gain or a normal regulated income?
So capital gain would occur once you're selling something. So for example, like you have bought a crypto and now you're selling that crypto. Selling does not directly mean selling in terms of INR. If I am converting one crypto to another crypto, even that is selling. Like, because let's say I have Bitcoin and I'm now converting Bitcoin to Ethereum. So I'm selling my Bitcoin holdings to get Ethereum holdings, or to buy Ethereum holding. So even crypto to crypto transactions are considered as selling events. So when I'm getting any crypto and I'm converting that into, let's say like USDT, or into any other crypto, or into INR, each of these events are selling events. Now, how would I get crypto? Either I would have paid to get something, I would have paid in INR, or I would have paid in any other crypto, or I would have received it from someone else. So when I'm receiving it from someone else, those transactions can be tagged as, let's say, staking rewards. Those transactions can be tagged as, let's say, like consultancy income or salary income or airdrops. So there would always be a receipt that is coming in, and there would always be a sale that would be happening in. So on the sale transactions, capital gains occur in, and on the receive transactions, then you need to tag them accordingly, depending on the nature of the transaction. If you have actually paid INR to get that crypto. So it is a buy transaction. You have put certain amount from your bank account or from your cash pool, and then you have bought those cryptos. But if it is coming as an airdrop, so you need to tag it as an airdrop and then treat it accordingly.
Interesting. So these are already tagged for specifically for Indian regulations, right?
Sorry, I lost a voice.
So this specifically is also for Indian taxations also, right?
Exactly, yes.
So with this, like for specifically in India, so we have came across multiple bans and everything, and now India has recently launched its own digital currency, as in the CBDC basically, called as digital rupee. So what are your takes on how you think, like how will it work?
Sure. So CBDC or central bank digital currency, is uh, like a, I would consider this as a digital version of cash. So let's say, like, if I am doing a UPI transaction to you or a bank transaction to you, what happens? Like, on the face of it, I just scan a QR, enter the amount, and then money is gone. But if you look at the back end, there are actually ledgers that get reconciled between banks. So if I am transferring funds from my Kotak Bank to your ICICI Bank, then my Kotak Bank and ICICI Bank are reconciling at the back end that, like, okay, so and so amount has to be deducted from sending us account, and so amount has to be reflected in the receiver's account and all of those. But let's say if I'm giving you 100 rupee cash, right? Would you ask me that where did I get this 100 rupee from? Or would you, do all of those reconciliations, and would intermediaries be involved in doing all of these reconciliations?
Correct.
No, right? You would just accept that 100 rupee cash on the face of it, and then you would say, okay, done, transaction is done, and the deal is done. So e-rupee is a digital version of this cash transaction where you do not need any of these bank intermediaries, and I can just transfer, like coins or e-rupee from one account to another account without the involvement of intermediaries. So on the face of it, at the end user, it would not make any difference. Like, I would simply again scan a QR, I would enter the amount sent, and the other person will say, okay, deal done, and you can take the biscuit chips or whatever transaction it was for, or thank you for paying for the cab ride. But at the back end of it, there are no intermediaries now involved. Everything is on one ledger. That ledger is being maintained by RBI, and using this, like, everything happens on a one single network. So there are not multiple networks or multiple companies that are coming in between to like handle all of these transactions. And this will bring in again the scalability and single point of truth in the entire system, because you don't need like multiple ways or multiple places to go and search for that transaction information. Everything would be available on one single network at your disposal. So that is something that e-rupee brings in. And then this is on a very, like, prima facie, if I'm just scratching the surface. But then deeper into it, I can, the way e-rupee is defined is, like, while you're transferring funds. So let's say now government is transferring subsidies to, like, beneficiaries out there. And the subsidies can be, let's say, like, giving an amount to buy seeds, giving an amount to as a compensation for, like, let's say the farm produce that farmers have done, or any other thing. Now today what happens is, like, government just transfer. Earlier what used to happen, there used to be cash that used to be given in to these farmers, and then there was a lot of leakage in the system. And let's say if 1,000 rupee was to be distributed as a cash, only 20 rupees or 2 rupees used to end up at the farmer's pocket. But then there was bank accounts being created and digitization that happened. So now the entire 2,000 is directly transferred to the farmer's bank account. So there is no leakage in between, and the farmer is directly getting 2,000 rupees into his bank account. Now the problem with the system is, like, how do you ensure that 2,000 rupees that was given to buy seeds, the farmer is using this 2,000 to buy seeds and not using it for some other purpose, right? How do we ensure that? There is no mechanism to do it. Now with e-rupee, you can, while you're transferring the funds, you can limit that spending of funds to a particular merchant or to a particular vendor. And then I can only go and spend this 2,000 rupees I cannot just scan any random QR and then make a transfer. I can only scan QR codes that are, that mention that, or that are registered as that particular vendor against their code. And only on those shops I can make these transactions. So this will, like, bring in a lot of these additional values and additional benefits along with it. And at a simple sense, it is like a digital cash.
Interesting. So, in an overview, I would say that the mediators and the amount which used to go from 1,000 to 20, it would go directly as a 1,000 specifically. Just for an example.
Yeah, even today it is 1,000 with digitization of banks coming in, but then the purpose of that utilization is not being ensured. So let's say 1,000 went in for buying seeds, but the farmer might be buying, some any other stuff with it.
Yeah.
But with this, like, they can ensure that the purposing is being met. If I'm sending someone 1,000 rupees to actually, let's say, like take up a course or to buy seeds, then they can only and only spend this with those vendors and cannot spend this by like partying in or doing any other random stuff.
Interesting. So, with this, like the whole CBDC and digital currency, digital rupee specifically. So, what do you think about the current situation of cryptocurrencies of say, like they are taxed, but are they like legalized or like will be legalized? What do you think?
So, like, is it regulated or is it legalized? I think it is. Government already, accepts it as a taxable event. So it means that people can trade, people can, trade on cryptocurrencies, and whatever they are getting out of it, they can then use it as a, uh, they have to basically pay taxes on it. But if your question is, is it accepted as a legal tender, meaning as a currency, and can I go and buy items from a shop by paying in cryptocurrencies? I think that is a hard way and a long route coming across, and I also don't think that is something that the industry wants at this stage. uh, a lot of us want, the nature of cryptocurrencies, like how people treat it as securities and how people want to use it as an investment class, that being coming in, and then leveraging the power of blockchain for, let's say cross border transactions, for supply chain transactions, and for multiple other such type of transactions across happening, but not specifically linked with buying, or not specifically linked with, let's say like removing the Indian rupee altogether and then bringing in any other cryptocurrency, or bringing Bitcoin, or that is not something that is happening in any times.
Understand. Okay. With this, I think there's one point which this thing when recently the 30% taxation law was introduced. So, what is your opinion about 50% taxation plus the TDS?
Sorry, I missed your question.
So, basically, in the recent times, the 30% taxation has been introduced, right? And also the TDS has been introduced. So, what are your opinion?
I think my opinion stands similar with what the industry thinks, and like it is, it is a harsh situation, and the like it could have been relaxed. Like currently, it is at the highest tax bracket, which is 30%, and then there is also 1% TDS. The idea of 1% TDS was, I think, government wanted to keep a track and note on what people are buying and what are the volume that they are buying, and on what date, so that they can have some mechanism to understand what is their, like if people are exposed towards cryptocurrency transactions. But the 1%, since it is a trading economy and a lot of people trade in regularly, so 1% is a bit high amount, and let's say people who are trading in multiple times, a lot of their capital would get blocked just with the 1%, and they would be left with a limited capital, and there the traders are not incentivized, because on every trade, like every sale trade that I'm making in, even if it's a crypto to crypto transaction, a 1% of that total. So let's say if I'm trading with 1 lakh rupees, immediately 1,000 rupees are gone, and as soon as I made a trade, and I am now making a trade, the next trade of 99,000 rupees only, and then imagine doing some multiple of these trades and making a minute profit percentage. So my capital is getting sucked, even like with or without making profit. So even on lost transactions, my capital is being sucked. Even on my profitable transactions, these capital is being sucked. But I think the similar of this approach would have been a win-win if the TDS would have been, let's say, like 0.01% or 0.1%, wherein the government would still be able to identify like what is the volume, what is the who is the person that is doing the transaction, and then the traders volume would also not have been sucked. So let's say like instead of 1000 rupees in a 1 lakh, if 10 rupees were deducted, so even then the government knows that okay, 10 rupees has been deducted, as in like 1 lakh rupees of transaction has been done, and then 10 rupees from a 1 lakh is a minute pool, so that the trader would also have enough liquidity to do further transactions. So I think that is on the 1% part. And on the 30% part, like we see for long-term gains, short-term gains in stock market, there are different notations, there are different taxable events. Then on income from savings bank interest or income from FDs, there are different taxable events, and there are some deductions allowed over there. But a lot of these types of transactions also exist in the crypto space. So let's say if I'm doing a staking transaction, that is very similar to a fixed deposit kind of a transaction, wherein I'm getting, like a savings interest or fixed deposits interest. Similarly, in airdrops, that is very similar to gifts that people given, and in general, like 50,000 up to 50,000 rupees of gift is not taxed in India. So a lot of these kind of transactions also exist in crypto space, and if we have to make a comprehensive taxable framework around cryptocurrencies in India, I think a lot of these types of transactions have to be, like treated accordingly, and then given a clarity in terms of like how does the taxable event occur for this, and what is the tax bracket, like should people be considering this at par with the other similar event that happen in the financial world, or would it be a different crypto event altogether? So I think a lot of these kind of things needs to be addressed in the Indian crypto space.
Yeah, correct. But with this also, like the whole crypto taxation is so complicated as of now. So a normal user who is studying, how we can be tax compliant with companies like Koinx, how they can connect to you, and how services you can provide.
So I think like that is why we exist, since it's complex and it's something that people cannot calculate in manually. And that's why we exist, uh, and it's pretty simple to use. And let's say like what happens at Coinex is it's a very simple 3-step process. First step, you create an account on Coinex. And you can create it via like your mobile number or your email ID, any one of those, and you can just open up an account. Second step is to connect all of the exchanges and the wallets that you have transactions on. So let's say you have transactions on, like CoinDCX, WazirX, CoinSwitch Kuber, Binance, and all of these different exchanges. Coinx support about 180 plus integrations. So, like any exchange that you trade on globally, any wallet that you have transactions on, we support about 19 chains. So people who are having transactions on Ethereum, Solana, Tron, Arbitrum, Optimism, and any of these different chains can simply put in their public address of the chain. Or in case of exchanges, we have API based connections, we have file upload based connections. And so user can just go download a file from these exchange, upload it on Coinex, and it's done. Nothing else needed. So it is as simple as that. And within 3 to 5 minutes, like, usually it is like we have seen it is less than 2 minutes. So within 3 to 5 minutes, people would be able to get their complete tax related information. And, accordingly, they can just pay for the service and download the reports. So simple 3-step process, like create an account on Coinex, connect all your integrations, and then download your reports. That's it. Like nothing else needed. And the team is pretty active, the support team. And, like in case people face any issues, they can reach out to us not on one channels, but on 5 different channels. They can call us, they can put a live chat, they can create an email and a support ticket, they can DM us on any of our social handles, and we are all active in all these places.
Interesting. I think you are integrated with all the Indian exchanges also, right? All the like from CoinDC.
Yeah, support, like as I said, we support about 180 plus exchanges and integrations. So like it's yeah.
So with that, I'll have a specific question for businesses also. So there are many Indian marketing agencies or like development services providing specifically for crypto and Web3. They are getting their specific income, or like basically their business income in cryptocurrencies. So how that can be managed, or like how the taxation part works for them.
Very similar to how it works for individuals. So, like they can also just mention their cryptocurrency transactions whenever they're liquidating it, and upon the time. So whenever they're liquidating, it might be subject to capital gains. Upon the time of receipt, it might be an income tax event. So similar to that, like any transaction happening in this space would be very similar, and be it for individuals, be it for agencies. So, and accordingly would be the tax treatment.
Interesting. So one more question was like I had is about the double taxation thing specific. So there's like a lot of people do ask me about how the double taxation works when like if it's regulated for a particular country and specific for India. That's it. So how that specifically
Sorry, I did not understand the question.
okay. So I'll start with them. Okay. So I just wanted to know about the double taxation process.
Acha, double taxation event. Understood. Okay. So let's say like people who are in two countries and then are like looking at taxes for both those countries accordingly. Is that what your question is? Like, let's say people who are residing currently in Middle East or US, and then also like like residents of India, or at some point lived in India. So is that what your question is?
Correct. Specific for the crypto parts, I would say.
Okay. So currently, I would say there are no cross-border transactions are neither sufficiently covered by existing laws, or any particular guidance is available on their tax treatment. So, and it is like very crucial for businesses or individuals to look at how they are doing tax treatment for different countries. But in general, for individuals, like the taxable country would be the place where they are residing at. So let's say in India, I think it is for 220 days, more than 220 days if you are living in India, then you need to pay taxes in India. So it depends more of an individual on where they are living in and on where they are, residing in, and that becomes their tax country. So immaterial of whether that particular exchange that you're trading on is present in India or is not present in India, it mostly depends on where are you present in and which country do you stay in, and accordingly, that is how the tax treatment happens.
Interesting. Interesting. So there are a lot of things related to taxation. I think we need to cover in coming episodes also related to it. But for now, I think we have covered a lot of things. Taxation is something which I ask on every podcast. Like there's a question related to it, like how taxation and regulations. I take feedbacks on. But today it was an honor to have you and to know about the overview about the Indian regulations related to taxation about crypto NFT. So great to have you, Punit. Thanks for your time. It was great having you.
Pleasure. Thanks a lot for inviting in, and yep, thank you.
So any closing thoughts before you we wrap up?
Yeah, I think like a lot of people are scared about taxes. A lot of people are, like concerned about how do we do it. And I think it's pretty simple enough. And, like we have tried to build in a product that makes your process like complete, seamless, so that, you don't have to go and worry and think a lot about how it happens. But still, if you have any tax related questions, anything that you want to discuss, and you think that your use case is different and there is a special type of event that has happened, special type of transaction, like do not hesitate to reach out to us. We are always accessible, and like we should be able to help you with your query there.
Great. So thank you, Punit. Thank you. I'll also add your website link so that the ones who are looking related to taxation can have an overview.
So that helps.
Take care. Have a nice day.
Thank you. Thanks. Have a nice day. Bye.